So here we are. The crypto flash crash happened a little over a week ago. And you'll actually notice that the first people on the scene in terms of buying up the dip were not represented by retail investors. We were too slow. The professionals were those that really took advantage of that crash opportunity. Which kind of got us wondering, did retail investors, probably like yourself, like myself, did we not immediately respond by buying due to fear, concern? Were we intimidated based on what had just happened? Maybe it was even a lack of the proper contingency plan that would dictate how we should act in these kinds of circumstances. So I've been thinking about this kind of stuff, and it's led us to put together a plan that outlines the next 90 days of activity in terms of our strategy in the crypto space. What do we expect? What do we find important? And how exactly are we going to trade it? Welcome to the channel. My name is Maddie and this is Altcoin Buzz. All the best of luck if you choose to invest. Good luck to you as well if you choose to follow this plan. You just got to remember that I'm not a financial or investment advisor, and that means that this video is not official financial or investment advice. Okay, let's first set some context by discussing where we are exactly right now. This is going to help us orient ourselves. What happened on Black Monday is looking more like a leveraged-based liquidation to effectively crush short-term traders. In other words, a flash crash, but it happened for those reasons. It kind of looks to us like whales and long-term traders working to inflict maximum pain on those thinking that crypto is just a number go up system without interruptions. But as we know, that has never really been the case. There are lots of black swan events in this territory. And, you know, honestly, markets around the world are in a relatively fragile place. I'm not just talking about crypto. I'm talking about all the other markets that are out there. Inflation is everywhere right now. You know, United States inflation is often a talking point, but it's actually much, much worse in a lot of other countries that don't necessarily make the headlines in the same way. But certainly it does apply to countries like the United Kingdom and the United States, and that means that people have less money to invest. Even though that's not the hardest hit in terms of nations when it comes to inflation, those are two big examples in terms of where a lot of crypto capital flows from, and that flow has certainly slowed down as a result. The European Union has been in a recession, and there are fears that the US is soon going to be in the midst of one as well. That's possible. And so this Black Monday event saw a huge drop and shakeout of leveraged traders from all around the world. But crypto markets actually, to their credit, recovered quickly enough. The question therefore becomes, where do we go from here? And inevitably people will have subjective responses to that, but I'm going to give you our best answer in this video. Heads up, because Altcoin Buzz Alpha is now available in Discord. Join us to chat, research, and identify your next big move in crypto. Also get Altcoin Buzz Alpha content for free. Check out the link in the description of this video below. First of all, and something that I really want to emphasize here, is that the fundamentals of projects still matter. For all the great projects out there, that has not changed. There are a few like Ronin with their recent hack that had project-specific news affecting their performance. That's unfortunate. But the reality is that most altcoins out there just took a beating due to this flash crash because the entire market was going down and the entire network of markets around the world was suffering. But did the fundamentals of these projects really change? If you like Solana, for example, for its meme coins, Ton for its easy onboarding from Telegram, Akash for AI computing, or Ondo for RWA platforms, ask yourself, has anything really changed on those platforms or when it comes to these projects? The answer, at least to me, is no. In fact, it's a definitive no. Hopefully you knew that as well. Hopefully you've been staying up to date with your investments and you've realized that the good projects right now, in many instances, are suffering through no fault of their own. Now, it is never wrong to sell your position in an altcoin when their story changes, when the fundamentals of a project change that perhaps bring something new into the equation. Okay, but did something actually change for the most part during this flash crash? In the vast majority of instances, the answer to that is no. And so that can mean great buying opportunities for those projects that you already hold and which you know best. Another very important point I want to make here is that dollar cost averaging is still the best strategy out there. Using DCA is just an effective way to play this market and any market for that matter. Small, disciplined, regular investments. Just look at Bitcoin, for example, over the course of the last 2 months. It's kind of been all over the place, right? Had you just bought and held 2 months ago in mid-June, then you'd probably bought at about 71,000 approximately. And today, as I record, we're sitting just above $59,000. And with these numbers, yeah, you would have lost money, about $11,000 for every Bitcoin that you bought. But with dollar cost averaging, it becomes a very different story because we're buying more often when prices are lower and less frequently when prices are higher. That means we can make more money. In early to mid-June, at about $70,000, we buy less, but then at the recent low of $54K on July 5th, or even $49,780 on the 5th of August, that's when you'd buy more. In this example, we're looking at a $10,000 gain off the recent low alone that can make your dollar cost averaging into Bitcoin over the last 2 months very profitable by contrast with the first example I provided. So take a look at this here. In the last 2 months, with a simple buy and hold for $2,000, you would have lost almost $400 or 20% from $2,000 down to about $1,600. Okay, but buying the fluctuations at many different prices here means that we accumulated more Bitcoin, and that is the goal. With a buy and hold strategy, you would have bought 0.0282 BTC, and with dollar cost averaging, you would have bought 0.0314 BTC. So you got 10% more Bitcoin for the same $2,000. Plus, you also lost less in terms of dollar value. Your total value is $1,878 instead of $1,619. You thus did much better with this hypothetical dollar cost average strategy, and you lowered your average Bitcoin buying price this way as well. It's entirely possible that the market will remain volatile, and if that's the case, let me emphasize that dollar cost averaging is still by far the safest long-term method for buying your favorite projects. Let's wrap up here with some low-risk picks for the rest of the year 2024 here, and we're looking at 90 days here. And I'll just start here by stating something obvious. That is the fact that over the next 3 months, the lowest risk selection we can make is Bitcoin. Rumors right now are actually swirling that other countries are going to join El Salvador in terms of adding Bitcoin to their national treasury. And if that happens, then you can probably bet that game theory is going to kick in, meaning that FOMO will follow as well. Nations are going to rush to mimic each other because nobody's going to want to miss out. Also, during Black Monday, retail and small investors didn't buy, but institutions and whales did in a big way. Global liquidity is on the rise, and when it is, Bitcoin tends to benefit the most. So Bitcoin is one that's obvious. SUI is another really good choice here. The Grayscale Fund announcement of a SUI fund is going to raise the profile tremendously. We like this project quite a bit. Check out our video from the other day if you haven't seen it already. And really, there's only one thing in this project that we don't like, the fact that it has a low circulating supply. Out of the 10 billion total supply, only 2.5 billion are in circulation, or 25%. Really, that's the only thing you have to watch out for if it's a big deal for you besides a black swan or isolated event. And then one last low-risk pick that we like is a cash, ticker AKT. You know that we've written about this project a lot over the course of the last year. I've produced many videos on the subject of a cash network. But the fact is that it got hammered these last 3 months. If we zoom out a little bit, we can see that it's had a pretty tough run. AKT is probably down about 55% with no major changes happening in terms of the project fundamentals. It got hit pretty hard in the big flash crash, but through no fault of its own. We just look at this and we see a discounted buying opportunity. Instead of almost $6 where it was 3 months ago, we're now looking at $2.76. Given that nothing real has changed in terms of what this project is doing, it's worth taking a look at.